Hey everyone, Sam here. How's everyone going? Doing? You should be able to hear and see the screen okay. We're going to dive right in. Okay, great. Good to see everybody. So for those that are new to these sessions, we hold these once or twice a month. And the strategy that we work on here is quantifying the market's real supply and demand, meaning identifying where banks are buying and selling in the market so we can buy and sell there also. For those that are new, the strategy isn't really has nothing to do with conventional technical analysis or anything like that. I started my career on the floor of the Chicago Mercantile Exchange, and I was actually into currencies for quite a while. So, and back then, I didn't look at charts. Most people didn't look at charts. And why? Because you had the orders in front of you. My job was to facilitate institutional order flow, right? Banks, institutions, money managers, and so on. That's what I did. So what I did over the years was train my eye to, now I was not able to trade my own account on the trading floor because it was illegal, right? And why was it illegal? Because I would have been cheating. You can't lose money when you have access to the orders, meaning when you know where banks are really buying and really selling in the markets, where the big money is buying and selling in the markets, obviously you can't lose with that information. So it'd be cheating if you traded your own account. So instead what I did was I just trained my eye to see what those orders look like on a price chart. And what I do here in these sessions with you is simply share that and go over it in hopes that you'll understand it and be able to do this also. All right. So let's do a combination of things today. Again, for those that are new to the group, we'll certainly point out why things are what they are, but at the same time, we want to get through as many markets as we can. I have a huge list of markets, as you know, to my right over here, but I'm happy to look at the markets that you want to look at. So I encourage you to just let me know in the chat what markets you want to look at. They could be anything: stocks, futures, forex, options. We usually keep it pretty much to futures and forex, and because we're here for you. So whatever markets you want to look at, go for it. Here's one this was actually my 14-year-old found this one yesterday, and he was a little upset with me this morning because I didn't take the trade. So he's the one that put these lines in yesterday, at least this supply zone. So by the time we saw it this morning, it was working out pretty good. But the reason I'm sharing it with you is because if prices come back up here, this is the British pound. We're looking at the futures 60-minute chart. It looks like the high this morning was about 142.06. So anything higher than that, if prices do happen to get back up into this zone, I'd be okay shorting it again for a bigger move down. What we have here is a nice strong supply zone with very little demand below. We already have evidence that there probably isn't any significant demand, at least not down to the 140.90 area. How do we know that? Because prices were down here. The fact that prices were down here recently after leaving the level tells us there can't be any significant demand above this price, right? So we've got our supply zone up here. And again, we want to look at something higher than 142.06. So I'd say 142.08 to about 20. So about 12 ticks of risk in this market. I'm sorry, you probably want to add a teeny bit more onto that. So no more than probably 15 ticks of risk in the futures here, and you're looking at about the same pips in the spot market. Make sense? Okay. Okay, let's move on. So still a nice opportunity. Now I know we've already had a pullback into this level, but the fact that price just touched the level and fell already, it gives us a good clue as to the supply-demand equation at the level. So probably a big imbalance up there. Okay? Again, for those that are new to the session, notice the level itself. Very little trading at the level, suggesting a big supply-demand imbalance. Right? The less time price spends at an area, the more out of balance supply and demand is at that area, followed by a pretty dramatic and strong drop in price. So again, another hint that so there's a big supply-demand imbalance up here, and that big smart money is selling up at that level. All right, let's go to the next market. Yeah, so I see the next one you guys want to look at is the S&P. No problem. Maybe better that we look at the NASDAQ, but let's go to the S&P and see here. Let me pull this up. Okay, S&P. All right, so what we want to look at in the S&P is, let's see if we can get the same levels here. So I'm going to put a horizontal line across the high. The reason we're going to do that is so we can have a reference point when we scroll left. So let's do that. There we go. So this is where we hit price. So we'd want to look inside here and see if we have any supply levels in here. Obviously on this time frame we don't see anything. So let's go to a smaller time frame and let's skip down just a little bit. Okay, let's put that same horizontal line in. And again, I'm just doing that for a reference point. I could have done that on the last chart. It's normally what I would do. We're going to need just a few more days in here because we're now down to a 15-minute chart. So get that in there. And now let's scroll back till we hit that price. Now when we blow this up, everybody see what I'm seeing here? 2084. Notice it's created early in the morning here. We like that. So we've got about 2084 to 87. Let's scroll right, make sure that's still fresh. That looks good. All right, so we need to get about 2-3 points above the high. That doesn't seem out of the question. Okay. I'm just writing a note because I'm gonna take that one too. I plan to anyway. All right. There we go. So that's a good one. As far as the demand side, you'll see even though we're down to a smaller time frame, we still don't have any significant demand below current price. See that? We look here. If I go down and left, these are not fresh demand zones, and I'm already down to a 15-minute chart. Okay. So you'd have to get down to this chat box. You have to get down to about the 2020s, so about 50 points lower than here before you get into any significant demand where we'd be interested buyers. All right? Could a demand level form, at some point above that area? It could, but until that happens, that's what we have to go with. So nice big profit zone in there. What does that tell you about volatility? Volatility should pick up a little bit with that much room. Let's cruise over to the NASDAQ. And I think what you'll see here, let's go to the hourly. Okay, put some horizontal lines here. Across the top. Right, and you'll see as we get up to, close to 4,600, there's some supply. You kind of hit supply after supply after supply. Looks like we're falling, from this area right here. I'm on a 60-minute chart, so if you go down to like the 30 or 15, this area that it's falling from is going to be a pretty nice level. Okay, so you can see we're falling with that NASDAQ supply there, and then we also, if we make a new high, we have that S&P supply above. Okay, let me scroll back here and catch up on the chat. See what's Yeah, I see your question there. As far as time frames and finding levels, if you're doing the short-term trading, you're going to probably want a combination of one larger time frame chart, maybe a 60-minute or 4-hour, something like that. And again, there's no magic in any of these time frames. And then, of course, you want to identify your opportunities on those really small time frames, those 2, 5, 10-minute charts. So when you find, and the key is to find fresh, keyword there, fresh supply and demand levels with nice big profit zones. And when you find that, that's what you're looking for. You don't have to worry about anything else. Okay, in other words, find an opportunity, a real opportunity where, the chart is offering you the opportunity to, risk 5 to make 20. And when you have that, consider taking your profit at 15. See what I mean? Nice low risk, very attainable profit targets. All right, I see Mark wanted to look at the euro. We can certainly do that. Let's take a look. And let's go to the spot euro. Got some old levels in here. Let's get rid of that. Okay, so euro's moving up. Let's start here though. You can see on the weekly chart, we're just in this big range that we've been in for, over a year now. We're still in this range. That's why you're going to see, as the range goes on, you're going to see prices move quicker from the top to the bottom, right? The more you're in this range, the less imbalance you have, the less unfilled orders, I guess, is the best way to say it. Okay. You can see on the weekly chart where that big supply is above. Let's bring it down. Let's go down to a smaller time frame. And let me see here. Let me just move this chat window. So on the down to the 60-minute now, and we have this supply zone that comes in at 130. I'm sorry. Right here. Okay. Let me just let's just confirm that. Same area. Okay. Nothing else before that. So let's pop that in. Now, if you probably noticed, not only are these levels turning points, but they're also magnets for price. And then this one. Okay, there's that one, and then that one. All right. So I know that level's a ways away from current price, but there's really not a whole lot to stop this. There's nothing below that we'd be comfortable shorting on, at least not yet. Again, could a much smaller time frame level develop? It could, but you don't really have any demand. You don't really have any other supply levels to focus on right now. Let's pull up the 15-minute chart here, and you'll see, again, there's the same area, right? So before that, there's really nothing else, even on a smaller time frame, and no demand below. So I'd stick with that if you're going to just short-term day trade this market. Here's a little level that just kind of popped up a few minutes ago. Right? We may be able to buy a pullback to here. Let me put that level in. Oh, when I say nothing, I don't mean like literally zero buy or sell orders, but nothing significant. That's the key word I left out. And I got to get better at that. I always say nothing, but I don't mean absolutely nothing. What we're interested in finding is price levels where the smart money is a buyer or a seller in a big way, right? Anything else we're just not focused on. Oops. There we go. 2850. 2850. Yeah, we wouldn't go with 2850 because you have your demand zone here. Price rallies out of that level, and then it came back, and then it took off. I guess because it just barely touched the level and took off. We might be able to buy it again when it gets down there, but probably not, because the other reason is, remember, every level you see on a chart, every fresh or real supply and demand level, a lot of people think they know what a supply demand level is, but they don't. But let's say, my point is, every level is here because of another level's existence. So the other reason why you wouldn't want to go with the 2850 is because, when you get down to 128.50, you're going to have a supply zone right above you. So at this 28.50, you're going to have supply right up here when you get down here. How do I know that? Because you have a demand zone sitting here. So what's likely to happen if this price will come down to this level, bounce up, and then eventually when all the buy orders here are filled, and then price goes down through this level, you'll be left with a supply zone there. So we already know that at 28.50, there's probably not much of a profit zone above. Does that make sense? You'll see as you get better at this, over time you get very good at anticipating where the next level is going to be. Okay. Next market, again, I can go to, I have a ton of markets I can look at here, but, it's up to you. I'm here for you, so, oh yeah, crude oil, sure. So again, we always want to take a quick peek at that weekly chart in crude. Remember, we've been looking at this for months. We came back up to that supply zone, and we're falling from that level again. Let's go to, there's our daily chart. Again, popped right up into that level and are falling again. Now, why is price falling so easily? Because again, look at this time frame. There's really, what's going to stop it? There's no demand until lower. So to see where the next turn and move is, we need to go to smaller time frames. Let's skip right down to a 60-minute chart. We may not be here long. So the 60-minute, yeah, we're down in this area where we were at for a while. But again, this is not a fresh demand zone. So this is not an area where I would feel comfortable taking on a risk and buying. Okay. Looking at the 60-minute, and I'll go to a smaller time frame in a minute. Once we get down the 138.50s, this is an area, and right below, you have some demand zones stacked on top of each other. Okay. So watch that. And now let's go to a smaller time frame and see if we have any, short-term income trading opportunities here. So let me get rid of some of these old lines. I'm already down to a 15-minute chart. And boy, again, there's I don't see a buying opportunity here until around that same price, which is lower. But we do have some nice supply sitting right up here, about 41. You know, price is headed in the wrong direction now. I'd be really surprised if this met entry today. But for next week, take a look at 41. That supply zone will likely still be there. And as long as there's a nice profit zone below, that's a trade, you know, we may want to consider taking. Okay. Okay, good. Yeah, so last time we were together, I was in this crude trade. So I got out. Trade worked out pretty nice. I didn't get the best exit, but it was pretty good. I got most of it. So no, I did not get back in. Next market. Again, if you don't have any requests, I'll just run through my list. But if you do, let me know. Okay, natural gas. Let's take a look. There we go. So there's the weekly really quick. Not a whole lot to look at there. Daily, let's skip that one. Let's go right to this 4-hour chart. And so if you look at the 4-hour, what should jump out at you, you know, once you get the strategy down pretty quickly, you know, with this 4-hour, for example, notice these little areas above. So I would never look at this chart, this time frame, and call those supply zones. I need to look at them on a smaller time frame. But this chart, but I'm alerted to these, right? I have areas of interest I want to investigate on smaller time frames. At the same time, so that's what we have above, okay? What we have below, look where price is at. Price has been here a few times, right? So is that the picture of price coming to a level where we have unfilled orders, or price coming to a level where we have filled orders? What would you say? Yeah, partially filled or filled, right? Okay, so we likely have areas with unfilled orders above, and areas with filled orders at or just below where we're at right now. So what does that tell me to do? Go to a smaller time frame, find a supply level to short at, and should be okay. So let's do that. All right, so we come to the smaller time frames. Here we go. So we have this first supply zone here, and then we have another one sitting just above it. So with natural gas, not the, you know, relatively thin market, I'd rather go with the second supply level because, oops, I didn't mean to do that. Let's use that first supply zone below the level we're choosing to use up some of the buy orders, to fill some of the buy orders, so that when price comes to the level we chose, we have fewer buyers on, you know, we have fewer buyers up there, meaning price is more likely to turn. So I'm choosing the level where there's likely to be a larger imbalance out of these two. We already looked at the larger time frame, and we know kind of the opportunity below. I can scrunch this up. Well, look, even the fact that price went all the way down to this pivot low here before it starts rallying back up, again, just like the last chart tells us that there really can't be any significant demand above this pivot low, right? There really can't be any, otherwise price would never have came down here. Okay. Does that make sense? Okay. So, and we always want our protective stop just above it to manage the risk. And then our profit target should always be just before the opposing zone. Remember, always just before the opposing zone. Yeah, so we can, if we were to map this whole thing out, let me just put the protective buy stop in there. So let's look at that. Let's move this stop up just a touch. Oops. There we go. So we're selling short at the proximal line. Our buy stop is the red line. Now our profit target, so what I need to do is look below this pivot low to figure out where that profit target is. So again, I'm going to put that reference line in, the horizontal line, and I'm going to scroll left until we hit price. Whoops, that didn't take long. So is that demand? Where the line is at? Would we call that a fresh demand zone? No. So we bring the line down. Now we don't really need to. Now down here, is this a demand zone I would buy at down here? No. But would I expect a bounce there? I wouldn't be surprised if prices came down to this level and bounced up. Nice drop base rally. Nice strong move out of that level. There's that. Okay. So because that area of demand is right there, we want to put our profit target. Well, let me show you exactly how I do this. We want to do this. So for me, the key is make this as mechanical as you possibly can. All right. So there's our level. Now I want a profit target that's just before that opposing demand zone. So how do I pick that? If I want to make it really mechanical, can't I just say something like, whatever the size of this profit zone is from supply to demand, I'll put my profit target at 80% of that. Now, how did I get to 80%? There's no magical formula. The whole point is pick a number. It's almost like having the rule is more important than what the exact rule is. Okay, the more you can make this mechanical and trade and speculate in the markets like a robot, in my opinion, the better. So the quickest way to do that, I can take my Fibonacci retracement tool, if I want to, and just, I can figure it out, right? Okay, so I just do that. There's there's 75%, so I could just put my line. Okay, I could just figure out what 80% is. Or 75%, 80, whatever. Just somewhere before the level. Okay? Does that make sense? So now I've got a nice healthy stop, and my profit target is well before the opposing demand zone. So now my profit target becomes very attainable. Does that make sense? And look, when you look at my trades, often prices go past the profit target, but I really don't care, because what I care about is getting a consistently profitable strategy, and when I have that, I can then simply add position size if I want to make more money. Okay? I'm not trading like I want to be on the cover of a magazine. I just want to be profitable and make money. Okay? You don't need to go for the home run. Go for what the chart is offering you. When I say the chart, I mean the market, right? It's just the market. Ha. No thanks. All right, what's the next market we're looking at? Sure. We love looking at gold. Let me get rid of, well, let's just start here. Okay, so let's go down to start with this chart. Well, I've got a lot of old lines on that one. Let's use, there we go. Okay, I just want to see what's over there to the left. So the only challenge is here, we had a nice fresh supply zone up here, but now you already had a pullback. We do have this rally-based drop supply up here, so this area should work okay. Yeah, I think this is the one you're looking at, correct? So let's put our little level in here. And there's your distal line. Let's put the proximal line in. So nice strong rally base drop there. Okay. Yeah, the wicks, the wicks happen right at the pivot there, but after the turn, you do get this, fresh supply zone that develops there. So that's good. In gold, we know from looking at most of these big time frames, you don't have any significant demand anywhere close. Okay, so we'd expect another big move down into that area. So watch that level above. Yeah, is it the strongest level we've ever seen? No, but okay. Let's see. Next market. 10-year. One of my favorite markets. Sure. Okay. So just to put this into perspective for everybody, this is where here's a nice big time frame of the 10-year. Let's go down a few time frames. And so there's a 60-minute. So let's do a little exercise here to see if you really get this. Take a minute or two and type in the chat the fresh supply zone above current price and the fresh demand zone below current price. You can only put in one supply level, one demand level. Find the nearest fresh supply level above current price and the nearest fresh demand level below current price. Type it in the chat, and then I'll put the levels on in just a minute, and we'll see how you did. Okay. Give me just another 30 seconds here, and I'll start putting those levels in. All right. And try to get those levels in here. We'll see. Okay. All right. Okay, good. So as you're typing those in, let's put some levels out there. So there's that one. what's nice is that's coming right out of this even stronger rally-based drop supply up here. Okay, we'll cover this whole area. I'll get these in as fast as possible. Oops. Okay, there's that. All right. So that's what we have for supply above. So remember, we're only focused on fresh supply and demand levels. Below, possibly a little trickier, but not bad. Okay. And look, there's a good chance that this is going to turn right here. So it looks like, some of you had these numbers right here. Might as well just make this one. There we go. Yeah, you can use a 1-minute chart for, any market that has a lot of volume. You're just going to get a lot of trades and a lot of levels, but the strategy works the same, remember all these time frames, they're all the same market, right? So when we're bouncing around time frames on one market, it's just different visuals of one supply and demand equation, right? 129, 129.24. So that's just a pivot low. Remember, we would never call that, fresh demand. That would never qualify as a demand zone. Okay, there's a big difference there. So make sure you're aware of that. Okay. Let's look at another market. This looks good, though. I like this. Okay. Nice big profit zone in between. Sure, we can look at the Aussie dollar. And you typed in the futures symbol, so I think you want the futures, so we can look at that. Let's see. All right, one of these charts is catching up here. I've got some old lines in here. We need to. Let's just see what this is coming from. I vaguely remember this. Okay, so that one met entry already. All right, so this trade met entry did fine. Let's plan out a new one. All right, we're already down to a 15-minute chart, but this looks fairly good. Let me put some levels in here. Okay, and then we've got this one up here. Okay, not as high quality as the levels we just found, but as far as our odds enhancer scoring system, that bottom level would definitely qualify. This upper one would possibly qualify, but not 100% sure. So it'd be close. It'd be close. But those areas look good. Again, nice profit zone in there. Man, all we're doing today, fresh levels that have decent profit zones with them. Fresh levels, decent profit zones. That's it. Okay. Any questions on this one? So this is the Aussie dollar. Let's just quickly go back to that bigger time frame. Just make sure we're okay here, and we are. Okay. All right. Let's keep going. Let's take a look at our NASDAQ and S&P, just see what's going on here. Oh, maybe the S&P, we're getting a nice rally. So remember, we're looking at about 84 in the S&P. We've rallied about 4 or 5 points since we started our session here. So we only have another, maybe eight points to go. And again, that could happen in no time with today's move. So that's great. Right? Don't forget I believe it's 84 to 87 in the S&P. If we get up there. I saw someone asking about a 1-minute chart before. The S&P is a chart we can put on a 1 minute. Might even want to try a volume chart. That's what I would prefer. But when you look at this chart, you'll see nothing changes, right? You've got supply now. Watch what happens. You can watch this in real time if you're interested in doing this. Price should pop right back up in here. There it is. And then when you look down here, you're going to have a little demand right here. Should come down into a little bit lower into demand after hitting this supply. And then, you've got quite a bit more demand down in here. You could play these 1-minute levels and 1-minute profit zones, all morning long if you know what you're looking for. You have to understand how to identify a fresh level. And when you can identify the fresh levels, that means you can also identify where the fresh levels are not. And that's the key to the profit zone. Make sense? Now, you only want to look at 1-minute charts and little volume charts when you're looking at high volume markets. Okay. So I know we're pretty much out of time here, but there's my email address, sseiden@tradingacademy.com. I want to make sure you have that. If you have any questions, if you're struggling to reach your trading goals or whatever you're trying to do in the financial markets, and you need a little help or you have some questions, certainly you can send me an email. I'm pretty caught up on email, and I'll try to get back to you as soon as I can. All right, yeah, and if you send one I didn't get back to you, just resend it because you should be able to. You should have got a reply. All right. Have a great day, everybody, and we'll see you next time.